Listen up, because this is the part nobody talks about, but everybody's terrified of as much higher risk. If you're a founder, an investor, a partner, or someone who moves money and ideas, you know that fear right in your gut the moment you think about what's really on the line. That sleepless night thinking, what if this whole deal blows up? What if that sure thing leaves you broke? Or worse, irrelevant? The brutal truth is, venture is a war zone disguised as opportunity. And if you don't know how to manage risk like the top funds do, you're just walking into a trap, blindfolded and hoping for the best. Now here's what they won't tell you. Risk isn't about avoiding failure. It's about controlling how you fail, when you fail, and how fast you bounce back. The biggest players don't just spread their bets randomly or pray their gut is right. They architect their moves to survive the worst and seize the explosive upside when it hits. You want that? Pay attention. This is how. First, stop trusting the pitch alone. All those shiny decks and visionary roadmaps, they're guesses. The pros know that real risk mitigation starts with people, not ideas. They dig deep into the founder's resilience, track record, and ability to pivot under pressure. Because a startup's future lies in the founder's mindset way more than the product itself. Insist on meeting founders who wrestle with failure instead of avoiding it. Watch how they handle crisis. If they choke, so will your money. Next, diversification in venture is not about owning a little bit of everything. That's amateur hour. Smarter funds build a portfolio that actually complements itself strategically. They don't just throw darts. They create a networked ecosystem of bets where one company's failure can be offset and even turned into a gain elsewhere. It's about alignment, synergy, and influence. If you're not planning your investments like a chess game, you're playing checkers, and you will lose. And here's a brutal fact. Leading funds move faster than the market expects. They don't just wait for the perfect growth signals or next funding round events. They create real-time intelligence streams, inside intel, data on founder behavior, market signals you won't find on Crunchbase. That means they spot trouble months, sometimes years, before it's obvious. Get obsessed with data that goes beyond the surface, and don't rely on public info alone. If you're stuck chasing headlines, you're already behind. Another thing, the best funds rarely rely on just one checkpoint. They make staged decisions, milestones locked so tight that the founder can't slack off without consequences. If your portfolio companies don't have aggressive, transparent milestones made for brutal success or failure clarity, you're practically giving money away to fantasy. You need to build a system where capital comes in small, controlled portions, and every stage is a stress test for survival. Most importantly, stop ignoring the worst-case scenarios. Every single portfolio needs a clear, actionable plan for what happens if disaster hits. What happens if your biggest investment burns down completely? Where's the safety net? Who's responsible for the damage control? Leading funds build these plans before any checks are signed. And if you're not doing that, you're begging for a catastrophe you didn't even prep for. This isn't about wishful thinking or blind faith. It's about brutal, cold-blooded readiness. If you want to play with the elite, you have to think like them. Measure everything, challenge every assumption, and be ready to cut your losses quickly to protect the rest. That's how you live another day, and how you keep your edge sharp. So here's the no BS call. Double down on founder quality like it's your last dollar. Build a portfolio that's a real network, not just an accidental mix. Hunt down the real data, not the stories. Demand hyper-clear staging and milestones. And lock in disaster plans tighter than your pitch deck. If you can't do this, you're not ready. The good news? This thinking flips the whole game. It makes risk manageable. It lets you move fast, survive brutal hits, and win big. It means you're not gambling with your life savings or your reputation. You're investing with control and precision. If this sounds tough, it's because it is. But this is what the top funds know and live every day. If you want to stand next to them, start acting like them right now. No excuses, no shortcuts. Risk is the monster in the room, Train yourself to tame it, control it, and use it to crush the market instead of being crushed by it. This is the fight. This is the edge. And if you want to keep up, you need to get obsessed with these secrets. Now, subscribe to our YouTube channel and open the featured link to discover more.